Hi everyone, I'm Paul and welcome to episode 2 of my vlog on building a trading system. I've recorded a live trade on Bitcoin on the London Open, which netted a 2 times risk reward. The format for these videos is still a bit of a moving feast, so let me know what you think in the comments. But for now, please like and subscribe, make sure you turn on notifications so you don't miss any updates, and let's jump into today's video. So I'm a little bit late jumping into this one in terms of recording it, but I was standing here doing some testing, some forward testing, and I thought I may as well record this live and add that to the vlog for today. So basically this is the setup that I outlined in the first video, whereby we take the high and the low of the Asian range. So I've got the buy side liquidity marked out here, the sell side liquidity here, so that's the Asian range there. We draw out the midnight open, and what we're looking for is for the market in the London session to break down through the midnight open and take out either, in this case, the sell side liquidity or the buy side liquidity, and then reverse in the other direction. So that's what's happened so far. So basically from the open traded higher, we've gone down, taken out the low of the Asian session, so gone through that sell side liquidity. You can see we've painted this swing low here, and then we've created this fair value gap on the 1 minute chart. So if we just zoom in, I'll be able to show you the setup in a bit more detail. So this is our fair value gap here. So you remember in ICT's teachings, he outlines when you have 2 fair value gaps like this, you basically take your entry off the first one. You have your risk set so that you can accommodate a trade down into the first fair value gap as well. So that's why I have my stop down here at the low of this candle, and you can see I've entered on the low of that first candle here, and I'm just targeting just up here, just below the highs before we sort of took out that sell side liquidity to the downside. You can see we're sitting in profit at the moment. Again, I'm just targeting the low hanging fruit, so this is going to be about a 2R return, not really looking to be too greedy. The market sort of moved quite strongly in my favor, and I'm hoping that that trade resolves itself fairly quickly. So just going to give the trade an extra minute or two, basically almost at target, and there we go, we're out of that trade. So that was a pretty handy 2 times risk reward trade. So if I just run through that whole trade in its entirety now. So this was our Asian session. So you can see we had the buy side liquidity, or the high from that session here. We painted the low here, and obviously this was our midnight open here. So we've come into the London session, and you can see the market was trading above the midnight open price. We've traded down below that, taken out the sell side liquidity. There wasn't really any other relevant sell side liquidity that we took out here, but you can see we painted our swing low pattern here, and we've taken this fair value gap trade on the 1 minute chart. Now if we zoom right in, you can see this is my little summary of the trade here. So you can see we painted the swing low here. Now we didn't immediately create that fair value gap, or not one that we could immediately take. So you can see this is our fair value gap formation that we acted on here. So we have this break in market structure here. So this is our swing high pattern here. So our 3 candle formation. So you can see the high of this candle is higher than this one and this one. So this candle breaks market structure as we trade upwards. So this is our displacement that we're looking for. And then we get this trade back down, and you can see the market comes back into the top fair value gap before trading away. Now remember, one of ICT's rules is that we take the trade from the first fair value gap, or the top one, or the low one, depending on if it's a bullish or a bearish setup. Obviously this is a bullish one, so we're taking the top one, but we need to be able to accommodate price going all the way into the lower one, or the first fair value gap, and so we have our stop down here at the low of this candle. So you can see the market trades into the fair value gap. We consolidate sideways for quite a while. Now I wasn't really worried about this consolidation, because you can see we have these consecutive down close candles here form one order block. And so if we draw this out, if we draw a box I should say, that'll be easier to see. You can just see how price respects that. So we almost touch there, we touch there, we touch there, we touch there, and then the market starts to trade upwards. And you can see how this trend is quite strong, and we have these down close candles here, but they really act as support. So you can see we trade down, form support, we go again, come down. They're just like little speed bumps until we get our target. So let's just update this here. 2 times risk reward. And another successful trade on the London Open. I hope you enjoyed episode 2 of my vlog on building a trading system. So far, the London Open setup's been working really well. This week, I've managed to have 3 profitable trades, and I'm going to post a review of the week's trading in the next video. So I hope you're finding this series on building a trading system helpful. If you are, it'd be great if you could like this video, because that'll help more people to find it. And make sure you subscribe to my channel and turn on notifications so you don't miss any future updates. Thanks for watching, and I'll see you in the next video.